One of the things that continues to stand out in our research is the VIX analysis. What you see here is the VIX plotted at the top, and at the bottom you see the average range of the last 14 bars. And what you see also is the current value, 0.94, is down here at pre-pandemic lows, or lower than any low in the pre-pandemic era. Pandemic started in this era right here, February of 2020, and the VIX was elevated, and it's made its way all the way back to levels, the average daily range levels, not the actual VIX levels, but the average daily range of those VIX readings are down below 2020 levels, and they're actually at the lows of pre-pandemic levels, and actually near the lows of 2017. 2017 was a unique year when the VIX hit in the 8 handle, and the VIX were at their lowest readings. We're not in the 8 handle, we're in the 14 handle, but the average daily range, what's unusual about it is even though the VIX is almost twice 8, the average daily range is closing in on these 2017 levels. And so if you take a look at these levels in 2017, the lowest level I saw right here was 0.74. Let's go to 2017. So here you see, here's the beginning of 2017 right here. This is the end of 2017, and you can see the low VIX readings up here. And what you see is this average daily range continues. The lowest one is 0.62 right here. 0.62, and then 0.94 is in this area just below this line right here, and you can see the 0.94 where we're currently at is in the lower range of what you saw in 2017. So in 2017, while we saw these low VIX readings and low average daily ranges, we're there on the low average daily range where we were in 2017. We haven't hit the low point yet, but it's very low levels of activity in the VIX, price action, toneless market, more difficult to trade. And I'm going to tell you what I've found in a minute after we do this VIX analysis and how we can improve our trading with this. So if we go over here to, let's go back to the current time, the current date, 2023, and you can see, let's expand this. This is the NASDAQ VIX. We were on the regular VIX. So you can see since June, the VIX dove below the 1 level, and then it rallied here a little bit towards the end of August. Then it's in September, it's been crushed back down to sub 1 level. And one of the things I wanted to test was short signals especially. One of the things I've found is on momentum shorts like gap continuation, they do better when you make sure the average daily range of the VIX is greater than 2. There's lots of different ways to express the VIX, and so that's one of the things I'm testing is on strategies like gap continuation that doesn't have a very good short signal. We look at taking short signals when the average daily range of the VIX is greater than 2. This is the VIX of the NASDAQ 100. You can see it's at very low levels as well, and it's a little more choppy, less liquid than the CBOE VIX, which represents the options on stocks. And you can see it's back at 2017 levels. 2017 is right here, is kind of the midpoint of 2017, and so it's right there about the midpoint of 2017 levels over here. And let's look also. And many don't know that there's also VIXs for the euro currency, volatility index, $EVZ.X, gold, $GVZ.X. And what's interesting about gold, very low levels of VIX in the gold. Let's look at the monthly, and you can see we're way back here. Just very rare when the VIX comes down to these levels. You see also in 2018, gold hit its lowest levels in 2018, and it's just extreme low levels. Let's expand this out. Here is 2018. This is monthly. So extreme VIX crush in a lot of these markets. Oil, even though oil is high, very little VIX activity. Let's look at the monthly so we can see more time frame, more time. And so really low levels of the VIX is at really low levels, back to 2018 levels as well. And so let's look at the sum of these. So in this next chart, you see the CBOE VIX, the oil VIX, the gold VIX, all plotted data 1, data 2, data 3, and this sums those up. This is the sum of the closing values of data 1, data 2, data 3, and it is lower than anything all the way back to the very beginning of the 2020s. And you can see it's even at low levels prior to 2020. So this 54 level, I'm going to plot that number so we can see it. So I added a plot for the current value of 54.76 so we could easily visually see how it lined up with history going back to 2017. And you can see it's at the low levels of 2019, low levels of 2018, through the middle of 2017 when you add all these up. So this kind of defines the market we're in, a market that's not moving much. Here's the easy language code for this indicator, very simple. Plot 1, close, plus close of data 2, plus close of data 3. And then this is the comment, or the label VIX sum. And then plot 2, I plotted 54.76 to show the current value in reference to the other plots. And I didn't label it, so I just closed empty quotes. And data 1 is $VIX. And data 2 is $OVX.X. Data 3 is $GVX.X. And this is in the TradeStation platform, and this defines the kind of market that we're in. Very low volatility, very little activity. And I'm looking forward to Q4, and I'm looking at these numbers to help us backtest strategies such as gap continuation especially for short trades. Will improve short trades. If you have a VIX filter trying to short a dull market with narrow VIX ranges is pretty hard to do. So using that as a filter can potentially improve your strategy with some common sense. It's not just a curve fitted rule. It's a visual rule that we can just see on the charts. And so I wanted to share that with you today as far as we are doing research, since we're doing research this week.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.